The sponsor for today's podcast is Repower Daily Electrolytes. Hello, I'm Kieran O'Connor, and this is episode 16 of the Calculated Risks podcast. Today, we are joined by Ben Davies. Ben is the co-founder and managing director of Hexa Finance. Hexa are a Newport-based commercial lender who specialise in working with businesses all across the UK for commercial lending and supplying financial products. Hello, Ben. Thank you very much for coming on the podcast.
Yeah, hi Kieran, how you doing?
Very good today. I'm very good.
Thanks for inviting me along.
No worries. Thanks for coming. You can see you've got some gifts there from our podcast sponsor. So some
Very
daily
good.
electrolytes, a bottle as well. And you've got to tell me which one's your favourite after.
Will do.
And the only thing I haven't got is my book. I did say to you off camera, I've got some more on order. So I owe you a copy of a book.
Perfect, thanks.
Coming next time. We start the podcast the same way every time. And I'm really curious to hear about people's risk-taking tolerance. And in particular, their first ever risk they took. So thinking back to earlier in your career, what was the first risk you took? And how did it make you feel at the time?
Yeah, so I went to university in Leicester, finished my degree, which is a marketing degree. So naturally was looking to find a role to go into after uni. I had a few options. One was a grad scheme opportunity in Cardiff, and the other was actually working for a commercial finance brokerage. A friend of mine had a successful business, played cricket with him. He offered me a role. Weighed it up, had a think about what I wanted. Needed to go travelling at some point to fulfil that ambition, and it just felt like the right thing to do. So sort of fell into commercial finance back in 2008. But I guess that's probably a good example of a risk. Could have had a sort of 2-3 year graduate role, but actually preferred the sort of entrepreneurial startup business feel.
Yeah, so the grad scheme could have been a safer option,
Yeah.
and who knows where you would have been now all these years ahead if you didn't take that that opportunity to go, not choose the grad scheme. So,
yeah. But it felt right. I spent a lot of time with the team that I ended up joining, and it's quite exciting to join a local growing business in Newport.
yeah, are they still going, that business?
They are
Yeah,
in different guys.
yeah.
Yeah, but many of the people I work with then network with today. So
Yeah, interesting. Okay, cool. So fast forward to now, obviously you set up Hexa Finance, we're going to talk a lot about today. What sort of risk tolerance do you have now, and has it changed at all over the years?
yeah, so I think my risk tolerance is pretty high now in terms of starting my own business. I'd say most of my career. So I left that role that I mentioned earlier. Did a period of travelling for 6 to 9 months. Moved to London to join another SME commercial finance brokerage. I think in my sort of younger years was really focused on career, progressing within a business. Was fortunate enough to join a company called GE Capital, so a large American-based lender, and then went on to join another a large corporate. So I probably didn't feel like that entrepreneurial at the time, but I guess everything happens for a reason, and I'll tell you a bit more about Hexa a bit later.
Yeah, definitely. So just touching on that lightly, we'll go into more detail in a bit, but setting up the business was the first big entrepreneurial step that you took, which is a huge step. What was the decision-making process around that?
Yeah, I think it's a funny one. Having worked for large corporates and been really interested in sort of progressing my career within a business, hadn't thought about setting up Hexa, but my business partner Stu's quite entrepreneurial. We worked together at a couple of lenders, and actually it was more of a timing thing. So had a couple of redundancies. So the lenders I worked for had changed appetite, changed direction. So back when I was at GE, they pulled out the market. Was thinking about doing it then, but with young kids, it probably wasn't the right time. So joined a fairly entrepreneurial Australian bank called Macquarie. That gave me a lot of insight into sort of how to grow a business within a business. And then when Macquarie exited that part of the market a few years later, it felt like the natural time to take a bit of a risk and start up my business. But very lucky to have done that with somebody else as well.
Yeah, definitely. So you mentioned redundancy there. You went through a couple. I think 3 out of the last 4 guests have also been through redundancies and ended up setting up a business after. So
I think it's a timing thing. So there's people I've met along the way. Some of them are naturally entrepreneurial. Maybe they come from a family of business owners, and all they want to do is start up their own business and take risks right from the off. But there's other people that I suppose I fall into that category where I think my career has sort of led me to a point of being entrepreneurial. So I think for everyone listening to this, and people that are thinking about can't I start my own business, it's all about timing, I think.
And now a message from our sponsor, Repower Daily Electrolytes. Picture this, you're in the middle of a busy day, work deadlines, family chaos, but without realizing it, your brain is running on empty. Just a 1% drop in hydration can tank your focus, reaction time, even your mood. That's why Repower Daily Electrolytes created the ultimate hydration formula. Packed with the right electrolytes your brain craves. Forget plain water. Level up your energy, sharpen your mind, and feel alive again. Stay sharp, stay strong, and hydrate smarter with Repower Daily Electrolytes. And you can use our code PLACE10 to get 10% off your first order. I suppose once you've been in the industry for so long like you have, you understand the commercials, you know how to raise capital, how to deploy capital, and everything in between.
Yeah.
And with the relationships you built over however many years, you know, that step is available then, and it's easier to do after 10, 15, 20 years than it is maybe in year 1 to 5 where you don't have the relationships.
Yes, certainly in financial services. I think having that experience working for smaller, growing commercial finance brokerages and lenders, that balance of experience has been really useful. But then obviously the network of people you meet along the way. So many of the lending partners that we've got at Hexa are people that I've either worked with or worked alongside through my career. And then there's the product knowledge. So a lot of that is learned in our industry. You learn about the different products and services that are available and how to deploy them. And I think that's in our sector that'd be quite challenging to do with no experience. But obviously there's other industries, such as making products and things where perhaps you can be entrepreneurial from day one. But it certainly helped me with working for the companies that I've worked for.
Yeah, definitely. So let's go back to the beginning then, that grad scheme that you had the option to go to or join a brokerage. Did you always decide that you wanted to, before you accepted that, was commercial lending finance, was that on your radar as a possibility for a career, or did that spark it when you actually went there?
Yeah, I think it was, on the radar. So I did a business and marketing degree in Leicester. So half of it was marketing and half of it was, business studies. So an element of that was financial, but I wouldn't say, I was, particularly strong in the accounting side of it, for example. But I was certainly interested in the business that was actually supporting customers access finance. So when that opportunity landed, it just sort of ticked all the boxes, really.
Yeah. And when did you realize throughout your first few jobs that actually I really like this? This could be a long-term thing for me, and I quite enjoy the work that I'm doing.
Yeah, I mean, pretty much straight away. You're working with good people. You're actually helping other businesses, raise finance for them and seeing them grow. So that's always been the bit that I've enjoyed about financial services, is actually the customers you meet and the customers you help. So I worked for a commercial finance brokerage in Newport for 12 months. Did a period of travelling, then moved to London and spent about 5 years in London for another growing commercial finance brokerage before actually joining a lender. So I've always been customer facing, always been fairly commercial in the roles that I've had, and it's definitely the people you're helping access funding is the bit that's always excited me the most.
Yeah, and it sounds like you've worked for some smaller companies and some larger companies.
Yeah.
What's the biggest difference you see in your industry from a really small company like the one in Newport compared to the one maybe in Australia?
Yeah, I think it's probably the layers within the organisation. So smaller, more nimble SMEs are able to, I guess, probably pivot, change direction a bit quicker. But some of the larger corporates, well governed, strong on regulation, compliance, customer service, that sort of thing. So there's probably bits of everything that we've taken and put into Hexa. So yeah, it really does depend. We rely on large corporate lenders to help fund our customers. So there's loads of positives with the sort of larger corporate side, but then the smaller businesses like Hexa are able to adapt and change direction quickly, which is, I think you need a bit of both really in the market.
Yeah, I agree. It's probably similar to our industry actually. So us as a smaller company of 7 people, our superpower is being able to get closer to the customers and probably make decisions quicker.
Yeah.
Some of the larger companies, they get access to maybe bigger clients and like the frameworks that we can't get on.
Yeah.
And imagine in your world, they probably get access to large amounts of money, which might be difficult for a smaller company to get as well. So it's a good blend of both, but it is hard to get.
It is as
the
well.
right
And,
amount.
I think one of the key reasons for, setting up Hexa and why other commercial finance brokerages exist like us is, we've got access to multiple funders. So I mentioned about, the redundancy earlier on. Just because your particular division of a bank is performing well, I was lucky enough to work at GE when we were, really strong team. But the overall business based in America decided to sell off a large portion of their finance businesses globally. So you're sort of taken out of your hands a bit. Whereas I think being sort of in the position we're in now, and same as you, Kieran, is you've got time to make changes to your business as opposed to having things imposed a bit, which is obviously a challenge when you're in employment.
Definitely, yeah. That redundancy bit, if you don't mind sticking on that, because we've had three
Which
up the
one?
last four. Yeah, any of them. Which one have you learnt the most from, I guess? Because, we see it probably more than anyone else because we're in recruitment, right? About how difficult the job market is, redundancies, even some very reputable companies, some of the biggest companies in the world, also the smaller ones as well. So, when you were faced with the news, what sort of things did you do to proactively get back out there and find something else?
So with GE Capital, that was a decision that we couldn't really control because it was a business wide decision to sell off a large portion of their finance businesses. But one thing we had there was time. So one thing I can't fault is the way that they treated their staff for that period. So they knew that they were divesting a large number of their businesses, but they actually actively supported us with with finding future employment. So if I look back at that, that was sort of 2015, 2016 time that was sort of happening because they were exiting the market completely. One of the challenges I think is around like covenants and being able to speak to customers that you've perhaps managed over the period. Well, because they'd exited the market, that probably opened up a larger opportunity for us to start looking at roles. And the team that I was managing at the time, we were able to actually go and speak to alternative lenders whilst we were coming to the end of our period of work there. So, we actually had a chance to go and, I guess, meet the market, see the market, and explain to the people that we were meeting, what customers we had access to, what products we've offered in the past, and
That's
that
quite a
actually
rare
helped.
opportunity.
Yeah,
It's normally the opposite.
It was good, and I think that it was at that time when Stuart and I, my business partner, who were working together at GE, we thought about is now the time to start our own thing. But with young kids, it just didn't feel quite right. That security is certainly for me anyway, as someone that perhaps was risk averse, in earlier years. Going into another corporate role made a bit more sense. And then we were lucky enough to join an Australian investment bank. So really different culture to the American business, but we were able to go there and help build a division for them, which was really exciting. So it's, building a business within a business.
So you kind of had that entrepreneurial taste of starting something from the ground up or starting something early days. And,
it was a complementary division, and it was we had autonomy to help grow that, and it was exciting. Wasn't great that I'd moved back to Wales and then had to start working in London and Reading again, but it was all good experience and something I've certainly taken a lot from.
Good, yeah. I'm always fascinated by like people and their relationships, like managers and senior bosses. I know in the large companies, there's lots of red tape and decision making is quite slow. And the smaller companies, it can be very quick, and you can speak to the founder or director, for example. So, is there any managers throughout your career which you remember in a positive light or a negative light, and like you've taken some of their skills or traits into Hexa?
Yeah, real variety of leaders and managers. I like the word leader, as opposed to manager. So it's always good when people you're working for are proactive and lead by example. So no, really, really fortunate. My first boss, Jason, is now working with us at Hexa.
Really?
He's our operations director. So that brokerage I joined back in 2008, I was working for Jason. Now Jason's working with us at Hexa, which is fantastic.
That's a really good sign.
That's it's been. I've followed work closely with Jason over the years, which has been really good. Manager I had in London, inspirational leader, led from the front. Was always willing to support you, but demanded that you put the effort in, which is great. And then some of the leaders at GE and Macquarie have also been different, but some of them entrepreneurial, some of them really good at like managing the business. So like someone like a GE, for example, had a manager there that wasn't a commercial individual by any stretch, but knew the organisation really well inside and out, which obviously helped us do our role. And then Macquarie, really entrepreneurial, quite a flat structure in terms of you're sitting in open plan offices with directors and leaders of the business, and it's really entrepreneurial, loads of autonomy and trust. So yeah, loads of different things. I think some of the challenges that people might find with leaders are perhaps people they haven't got access to, or a bit elusive. Perhaps that's something that I'd struggle with, I think, personally. And then others that perhaps, how do I say it? Not sort of leading from the front and helping support people within their teams is another challenge. So yeah, I've been lucky. I've worked with with some great people over the years.
Good. Yeah, it's really hard to find those. It's really hard to find. It can be really dependent on the company you join, the team you join, the size of the company. If you get access to a good leader, like you said, or if you've got a manager, a micromanager who is barking orders but not leading from the front. And but sounds from your experience, it makes a massive difference, and it has in my career as well.
Micromanagement's a difficult one, isn't it? Because you got certain individuals love KPIs, targets, structure to their day, and actually I think micromanagement can be seen in a negative light. Sometimes actually giving somebody a framework and set of tools to achieve their job is what's needed. But I think it's really about identifying, I guess, the individuals within your team, what works for them, and trying to find strategies to help manage a range of different people. I think that's something that people find can find challenging is having one leadership management approach for one person in their team, and a different one from another. They fear of perhaps not being consistent, but ultimately I think you need to get to know the people, really.
Yeah, I completely agree. I'm curious to know how you find that, because 2 episodes ago we had Laura on, and she was talking about some of one of the things that she's learning is how to manage people and lead people, from using their different like preferences. Some people want to be verbally led, some people just want instructions and don't talk to me for the day. And as I scale the business, I'm dealing with different personalities all the time, and it's quite hard to realize where not hard to realize, but it's quite hard to gauge when someone wants X framework or X training, and this person doesn't like that at all. They want something else. So it's hard to spend so much time with one person and keep chopping and changing. I think how many people are in Hexa right now?
It's about 22.
Yeah. So I imagine you're managing or leading some people, and how do you find it with all the different personalities and the different preferences of how they want to be trained? How are you finding it?
Yeah, I think authenticity is probably the key word in leadership. I think as long as you're your true self, I think it doesn't necessarily matter the manager's style, as long as you're consistent and authentic with people. Now you've obviously got to try and find out what makes people tick, and then how you can support them. And obviously everyone's different. That's one of the beauties of the world, isn't it? Everybody's different. But I think as a leader, just trying to be authentic and consistent with people. But then ultimately, as well as as we've grown Hexa, obviously when we first started, there was only a few of us. So you're managing a couple of people, and then as you sort of scale the business and grow, it's important to then think about who within your team are have got leadership potential. I'm certainly not someone that likes taking control of the business. We've got some good sort of managers and leaders now in Hexa that are responsible for their function, and we give autonomy to them to make decisions. But ultimately it's me and Stu and that are the ones that are, I guess, driving the business forward and putting the strategies in place. But then the people underneath are managing the teams effectively, and then it's just regular communication back and forth, really. But by no means experts. We're still learning. We're only 5 years in, but surrounding ourselves with good people. We partner with a lot of people in Hexa, a lot of businesses. So we part of some good networking groups as well with with some other leaders as well. So just taking bits from other businesses and implementing them where we need to.
Yeah, so let's go to the point where you've set up Hexa, right? I imagine that's a really big decision for you to make. Being employed at corporates and smaller companies before. Not sure about Stu, but it's going to be a big decision. I know it was for me. So when was the seed first planted, and you thought, yeah, do you know what, this could be a thing?
So New Year's Eve 2019-20. So my role at Macquarie was coming to a natural end. I had 6 months left. Stu was working at another lender in Bristol. Sent me over some information on New Year's Eve saying, can you have a look at this business plan that I put together? I'm thinking of doing my own thing. What I found out later was Stu was trying to sort of test me and see if I wanted to get involved in it. But no, we had a really good relationship working at 2 lenders together. And I said we'd spoke about setting up Hexa before. Well, not Hexa, but a business before. So we just got chatting about his ideas, some great ideas about how we can support customers to access multiple funding options in the market, give stability, something that we'd obviously struggled with some of the redundancies we've been through. And then, conversations just, carried on from there, really. As I said, I was coming to the natural end of, my role. Stu had a bigger decision to make because he was still employed. Had a good career path at BNP, but, really entrepreneurial Stu. So I think the balance of sort of, me and him having worked together, was really good. So we just started, planning the business from there. So, yeah, seems like it's, gone quick, but also lifetime ago as well.
Yeah, wow. Okay, so I don't know Stu, and I'm sure anyone watching this might not be aware of Stu. So just talk with how did you meet first, and then just give us a background of Stu in a minute or two.
Yeah, so met Stuart G Capital together, joined the business pretty much at the same time. I think 2012 sort of time, 2011, 2012. Worked in the same commercial team, so spent a lot of time out together seeing customers. And when G pulled out the market, Stu joined me on that role at Macquarie, along with another colleague of ours. So we went and joined another lender together and worked together for quite a while. But yeah, no, always had a great working relationship with him. Our skills complement each other really well, and that's sort of played into Hexa. Stu's the commercial lead at Hexa in the new structure, and I'm sort of managing director. So just constantly communicating about plans for the business and where we want to take it. So we've got a great relationship.
Yeah, good.
There's a lot of trust there as well.
Yeah, it sounds like it's always interesting listening to these conversations because the word hindsight always comes up in my mind, and all those difficult times of the redundancies that have happened. But you met Stu at that time, and if you ever met Stu, if years later Hexa might not have been a thing.
Exactly.
And
it's just about it's about being you surround yourself with good people, and we both had different ideas, and one of mine was to support the local Welsh economy. Stu's got a lot of relationships with equipment suppliers, so the two sort of business ideas naturally sort of fitted together quite nicely. And then you need to trust the people you work with, right? So it's paramount importance. So
yeah, definitely. So Stu planted the idea with a business plan
very
around
cleverly
New Year's Eve.
planted the idea.
Well done, Stu. Yeah. So what's the next step there? I'm sure you had to speak to your family or friends. What was going through your head at that stage?
Yeah. So I think because I had 6 months left of working at Macquarie, it was either then go and look for another corporate job, or really give this some serious thought. So Stu and I spent, it was during lockdown, so we spent, a lot of time on the phone together, sending different presentations back and forth around the business. I remember looking at, some of the initial branding ideas and names, all that sort of exciting thing. So I guess what started off with, just a few messages about an idea he had, I quickly started to think, no, do you know what? Now is the right time. One of the things I didn't like about my role previously was the travel. So I just had my second child. So I was spending 3-4 days a week in Reading and London, which is obviously challenging with a young family. So I was thinking, actually, well, we're in lockdown, so we can't go anywhere anyway. But the idea of building a business, within South Wales, that work-life balance thing was really attractive. But obviously the risk was, I guess, how quickly could you make a success of it? How much did you have to put into it to get it to a level to sustain sort of, your outgoings as a family? So yeah, there was conversations with family, with close friends. We actually got some investment as well, which was a really good decision at the time. Not a huge amount, but it was enough that could give us 3 to 6 months of assured income. Which
that was before you started the business?
Before we started with a commercial finance business that we know really well. So that was good. So it's a combination of the planning that Stu and I had put into Hexa over the 6 years that we'd worked together previously, but also that period of throwing the ideas around, along with the backing of people you trust, say, no, you can do it, go for it, and then a bit of financial stability as well. That was the perfect package, I think, for us.
Yeah, nice. Okay, so you've started the business. Well, when did you start the business?
November 2020.
Okay, so that's a quick turnaround from, was that 11 months?
Yeah, exactly.
Yeah.
So log cabin in my garden, 2 of us working out of there. Yeah, it's crazy, really. But there was a fair bit of planning that went into that before we launched. But we obviously had to go through, full business plan, which helped bouncing that off the investors at the time. But then go to market strategy and things like that. So it was plenty of late nights in the build up. But then I was delighted to get going finally.
Who come up with the name Hexa Finance?
I can't remember. I can't remember how we came up with it. If I look back at the original business plans, there was loads of different names on there. We had a marketing agency that was working with us at the time that came up with some good ideas. We wanted something that was really simple, really fresh, and we landed on Hexa because my wife's Cypriot. She's Greek Cypriot. We've got 2 children together, and Stuart and his wife Ellie have got 4 children. And in Greek, the number 6 is Hexa. So it was, it certainly wasn't a quick thing, but as soon as we found that, we knew it was the right name for the business. And then it was about branding it. And the handy thing about 6 is we use that in a lot of our marketing. Use it in a lot of our PowerPoints to keep them nice and short as well. So it's had some really good benefits, and each cube of Hexa is one of our children. So there's some good meaning behind it as well.
It's a very creative way of finding a name for a business.
Exactly.
I like that. I do like that a lot.
But it took a while to come up with it. But once we found it, we were pretty set that was going to be the name for the business.
Yeah. Do you know what I found the hardest about setting up the business? The commercials and that planning ahead, forecasting before setting up was actually quite enjoyable. The hardest part was thinking of a name and the marketing and like the brand.
And you spend a disproportionate amount of time on that compared to the other stuff.
Yeah.
So then you're spending all this time thinking about what to call your business, what colours to have on your logo, all that sort of stuff. And then you think, actually, I need to put a business plan in place with projections, cash flows,
how to make sales.
I guess not the exciting thing, but
the more important stuff.
But no, that was great fun doing all that. I still look back at it now, like the original business plan, and seeing how far we've come.
Good, well done. So you mentioned there that the idea for Hexa was to have allow businesses to access different lenders or multiple different options. So tell us about Hexa Finance in terms of what's available and why is it a bit different to anyone else out there?
Yeah, so our background is all commercial finance and predominantly asset finance. So if I look back at the different lenders that we worked for previously, it's mainly been around providing finance for businesses to acquire things. So a large part of that is technology, so technology equipment. So if you think about IT hardware, software, telephony, print, just general office equipment. And a lot of the relationships we held at the lenders were with suppliers of equipment. So they're out there selling their products to businesses across the UK, but they're using a certain lender or a number of lenders to actually finance that. So spreading the cost of that technology investment over time. So that was the starting point for us. It was during lockdown. There were lots of government loans around, bounce back loans and things like that. But we had a clear plan that we wanted to start with what we knew, which was equipment finance and asset finance. And then it was about looking at the relationships that we'd held previously and where we could add value. So, a number of the suppliers that we work with have had, if you think about us being made redundant from lenders, they're reliant on lenders to sort of fuel the growth of their business. So if a lender pulls out of the market or exits the market, they're struggling to try and find, alternative providers to provide that service to. So that was the core part of our business to start with, which is, getting access to multiple funders for our supplier partners, and then providing a service to them. So looking at the pain points within their business. So, managing those funder relationships, a lot of the administration around, once they've sold their product to a customer, it's then about, we need to raise finance. So how do we do that process in as quick as possible time? So then we were supporting with raising finance documentation, cross-checking that against the invoices of them, sending it in for payout to the different lenders, really managing that service. So we developed some really, really cool service offerings off the back of that, and some of them are still in place today. So, one part of our business is, we're a service business for technology suppliers and helping them manage different lenders. But the other part is, supporting end user clients direct, so businesses direct across a wide range of industry sectors. So there's no sectors that we technically can't support. And then what finance products that they require at that time. So, now, if I fast forward to where Hexa is now, we've got access to multiple lenders that do different things. So we've got equipment finance lenders, we've got commercial term loan providers, secured and unsecured. We've got access to a range of lenders for invoice finance and asset-based lending. We've got access to funders that provide property finance, things like revolving credit, trade finance. There's a whole load of finance products out there, but often it's difficult for businesses to know which one to take at the right time, and that's something that we pride ourselves on at Hexa.
Yeah, there's loads of different options there, and they all sound like buzzwords to me.
And there's probably a lot more.
Yeah, I bet there is. Yeah. So they all sound like buzzwords to me and many other people. So
Yeah.
let's use an example. Let's say I'm a business and I want to raise, I want to bring in some tech equipment. Let's say it's £100,000.
Yeah.
I don't have £100,000. What would be the best option for someone like that who wants to bring it all in immediately? Let's get set up. We're building a new office.
Yeah. So that's probably a fairly straightforward transaction. Obviously, assuming the business's financial strength was there. So that's typically used with asset finance, equipment finance. So, spreading the cost of it, either on a hire purchase or a lease agreement. So for us, then it's about finding out where they're buying it from. Are they buying it from a UK supplier? When's it going to arrive? All the things that the lenders want to understand. And then for us, it's about, I guess, looking at the strength of that end user customer and whether they would support £100,000 lend into that business. So, that's when we, come alive and do a lot of work with them in terms of, accessing their financial statements, working with them on, by bringing in this equipment, what is it going to do for the business, that sort of stuff. So then we're putting an application into a lender with real information about that company, and then obviously making sure that the repayment profile is in line with their budget. So typically people spread the cost of equipment over 3, 4, 5 years, maybe longer, depending on the asset. So it's about working with the customer to make sure the budgets are right. But that's something that we'll hold the hand on, and make sure we're finding the right lender for them at that right time.
Yeah, it's interesting in my space because it's quite hard to raise investment or any sort of capital now to grow a business.
Yeah.
So I'm curious to know in your world, what's it like, to lend companies money for equipment? Have you seen any changes in the last, let's say, 5 years from pre-COVID to post-COVID? What's the differences you've seen?
I think in sort of unsecured lending, it's been really challenging. So if you're thinking of commercial loans for businesses, for example, typically require personal guarantees. There's a lot of due diligence done on affordability and things like that. So if you're typically when you're a startup, you're potentially looking for funding, which can be challenging. So it's around looking at what the right product is at the right time. So some traditional term loans might not be right. Is there other products out there in the market that might be a bit more fit for purpose? So it is difficult. I think the access for information has increased. So you've still got a lot of digital lenders naturally in the age we're in, but underwriters and finance teams are looking for a lot more supportive information. So for us, it's about being really clear with the client why we need something. If that makes sense.
Yeah, definitely. I wonder what are some of the common reasons that you've seen, when someone or a company, isn't available for any of the products that you've got. I imagine that might be quite rare because you've got quite a few. But why wouldn't they be eligible? And what are some of the downfalls? Because potentially someone might be watching this and they may need to sharpen up in that area.
Yeah, so we do mostly debt, so we don't do a huge amount of equity, although we've got some lenders that do provide it. So we're looking at debt products in the main. Really, it's about so some of the new starts. It can be challenging, but sometimes you can find products that will do it with guarantees or things like that. Or if they're putting in, they can demonstrate that they've put money into their business and there's a solid business plan. It's mainly around the information and the customers knowing their business and why they're why they're requesting finance. Almost getting yourself finance ready, I suppose, is the key thing. Yeah. Knowing your numbers, having good records available, and a lot of the businesses we work with have got fractional support with things like CFOs and management accountants that support them. If not, we tend to help advise people on where they can go for that information. So yeah, it's a difficult one. I'd say there's no real reason why someone would get finance over someone else other than just being prepared and knowing why you need the investment, really.
Yeah. So do you often have to tell people you're not eligible for a product, or no, now's not the right time? And, is that a difficult conversation?
Yeah, it is difficult. It is difficult, but sometimes. So I'll give you a good example. If someone comes to us and wants 50K for a project, but we could only provide them 20K, for example, that 20K might not. Sometimes lending too little is as bad as lending someone too much. So yeah, we're not afraid of having honest conversations. I guess we're in a fortunate position because we've got access to multiple things. So, there's usually a solution, but where there's not, we try and be clear on the reasons why. So we're giving them the tools that they can take away. It could literally be as simple as, a time trading issue, or they haven't been trading long enough, or they're loss making. That might be down to taking too much out of the business in a given year. So, we'll always give that honest feedback, and then hopefully they'll return and look for support. Also, if we can't help, so we haven't got whole of market coverage, so we've got probably 30 or 40 lenders that we use regularly, and there's a reason that we don't have loads more. We like building relationships with lenders and getting to understand their appetite and where they want to play. If we can't help, then we're lucky. We got quite a few people in our network where we can do referrals and things like that might be more suitable. Ultimately, it's around making sure the client's got access to the right people and the right products at the right time.
That's the most important part, isn't it? The building the relationship, and if it's a tough conversation, having it, maybe passing on some advice, and even if you can't help, a referral.
A referral is great. That. Yeah, exactly. There's plenty of businesses we work with that we give reciprocal leads to where we can't support. And, I think that's one of the most important things, certainly in the region of Wales, is, if you can't help for a reason, try and think of perhaps people in your network that can support. And then, that sort of approach has served us really well.
It's a very small place, South Wales, isn't it?
Certainly is.
What news travels fast, and it hopefully should be good news.
And, I'm Welsh. I was born locally, but I spent most of my career over the bridge. So working in Bristol and London and things. So when we set up Hexa, there was, there's a lot of work to do in terms of networking and things. And I realised that pretty quickly is, it is close-knit, based on trust. So, really invested in those relationships early on has certainly helped us.
Yeah. Okay. So let's go back to when you started the business. It's November 2020. Things are going well, I imagine, throughout COVID, still a demanding time. When did you realise, okay, we need to bring in our first hire?
Yeah, good question. So Stu and I were doing a lot of the doing, so a lot of the applications and things, and I wouldn't say that's our strength. Certainly, as we hadn't been doing it, in our previous role. But naturally, when you start up, it's all hands on deck.
Wearing all the hats.
Yeah, wearing all the hats. So learning how to raise invoices, learn about the finance function, learn about technology, insurance, compliance, all that sort of stuff. So you are wearing loads of different hats at different times. But I think when we'd secured a couple of contracts with some of our equipment suppliers that I mentioned earlier, the volume of work was there. So we were able to think about, bringing someone in, and then we just looked at the type of person that we needed, and we're fortunate enough to work with quite a lot of good people over our careers, and Adrian joined us as our first hire. Adrian Munger. So we got two Adrians, which is a bit confusing for
Adrian
you.
Coles then. I was going to say, wow, that was that.
No, so we got two Adrians. So Adrian Munger joined us probably after about 6 months, and provided an instant impact in terms of that service. So, having three of us supporting the clients, and Adrian's, worked in a range of different internal functions and external functions at lenders, so he was able to pick it up pretty quickly.
So what was his position?
So he was associate director at the start, so and now he's one of our leaders in the business, and shareholder of Hexa. So Adrian was responsible at the time for, I guess, managing the relationships that we had, probably like on a day-to-day basis. So Stu and I were thinking about how to grow Hexa and going out and seeing customers and various different things. Adrian was taking over the day-to-day, if you like, of when an application comes in, processing it efficiently. And then, shortly after that, we had to bring in someone alongside Adrian, and then it was four of us in the log cabin in my garden, which, was a challenge. It was small, and there's, 4 cars on the drive. So we quickly had to think about, were we going to go and get some real office space?
Yeah. Did Adrian join as associate director, or is that where he's at now?
No, so he joined as associate director. So we saw really early on that he was going to be a future leader for the business. And, naturally that sort of covered a number of roles. his role is more commercial now, so he's working in the commercial team alongside Stu, so they complement each other really well. But initially it was more on the operations and commercial side.
Yeah, it's really interesting because I know I can speak from my personal experience and from some of the businesses we work with. When it's an early small team, you and Stu, for example, and it's the first hire, it's so important. Like, do we hire someone senior and pay for them, or do we hire someone junior who can just take some of the B tasks that you mentioned, like the invoices, for example? It's hard to know which one.
It's really difficult.
So how did you know to hire someone more senior?
We looked at the areas in the business that we didn't have expertise in, and we actually outsourced a lot of those early on. So if you think like accountancy, marketing, IT support, those things. So we partnered up with some local businesses, and they provided, I guess, outsourced support in those areas. HR was a good one. There was only 3 of us, but we brought
Just
someone
in
in.
case.
Yeah, we brought someone in HR pretty quickly. So having someone so Adrian was, I think, probably about 5 or 6 years into his career. So not sort of 15, 20 years like Stu and I, but we saw something in him when we worked with him at Macquarie, and we knew he was capable. So it was someone that we could trust, because ultimately we were going out there providing a service to our customers, and we need the bit of expertise we needed was just more hands-on support around the day-to-day, as opposed to a certain function within the business that needed taken care of. So it was really important that we had someone that was capable, commercial, and I guess willing to take a risk with joining us as well. That's half the battle, because we were a startup business. Adrian took a big risk to join us, and he's still here today.
Good, what a story. So what was the trigger point for you to get an office? Because you said 4 people. I'm sure it's busy.
Yeah,
but
my wife told us we had to
out.
go.
Yeah.
Yeah, no, it was just getting to the point where we thought, I guess we didn't know where we wanted Hexa to go, and even now we don't know whether we're going to stay at 20 odd employees or whether we're going to scale it. But I think having that office space, Stu lives in Bristol, somewhere perhaps in the middle of me and Stu was what we were looking for. That's where we are now, down in Langstone by the Celtic Manor. Really good location for attracting people from Bristol, Cardiff, Newport, that sort of thing. So then it was the cost. It was obviously we'd had this little log cabin built, not a great cost, and then to think about going into office space was it was a big decision.
Big investment, yeah.
And we just went into a serviced office to start with, and we were there for over a year, which was great.
I know I speak from my world here. That was when I got my first office. That was when I was like, oh, this is real now.
Yeah.
Although I was doing deals in my world, making placements and sending invoices, I was doing it from home, and it was a great feeling. But that first office step was really big for me.
Yeah.
I'm so glad I'd done it. But was that when you realised, this is?
Yeah, it was nice as well. And
now.
you think about work-life balance. Obviously, I was working at home, and I had my colleagues working with me. So, I guess that family divide was another consideration as well, as having somewhere to go to work. And I think the world was starting to open back up then after COVID. So we were having little breaks, weren't we, where we could actually go and see people. So I guess having that variety, that's something I love personally, is the variety in work. So a bit of work from home, a bit out seeing customers, a bit in the office with the team. I really like that variety. Whereas I know some people just love being in an office 9 to 5, and that's perfect as well. But having that office was like, it's definitely I think it was a moment we were like, right, we actually want to scale the business a bit, and we've got over the initial, I guess, the scary times of first 12 to 18 months, taking more risk then than we ever have, and then we were ready to grow.
Yeah, I'm very interested in the scaling to 22 people in 5 years, which is great. Well done. I'm scaled from 0 to 7, so I know how hard it is to cherry pick who and what. Do I bring in a non-exec director, for example, which I have?
Yeah.
Do you bring in growth advisors like you have? So from the outside in, scaling from 0 to or 2 to 22, you'd think that you would know what you're doing. I'm sure you do. But what I mean is, it's hard to know who is right at the right time. So talk me through the process, and at what stage did you start hiring or not hire full time? When did you bring in like board advisors? Give me the whole process.
So I think with every hire, it's usually done based on the performance of the business. So the data available. So in our world, it's, I guess, things as simple as the number of applications that we're getting on a monthly basis, the number of customers we're helping to support, and then the average income that we're bringing in over the period. So we were able to, I guess, plan and scale. You've almost got to think about a hire, a few months before you bring them in. So the fourth person that joined was Alex, who's now an operations manager, and Adrian's obviously on the commercial side, like I mentioned earlier. And then it was thinking about, I guess, tasks within the business. Something you mentioned earlier about, do you bring in someone that can just do some tasks, or do you bring in someone senior? For us, it was around making sure that service, so as our client base was growing, they weren't suffering with service levels. So we had to try and find some really good people that, good customer service people that can support customers. And then we were thinking about, probably me, Stu, and Adrian were driving a lot of the commercial activity. But obviously, we're also thinking about how we grow Hexa. So we're looking at things like, do we bring in people with certain product experience to complement what we know about asset finance, or do we bring in people with a certain geographical presence and relationships in a certain area? So it's those types of considerations we had when hiring. It was getting the internal team right in terms of providing that service, and then thinking about, I think, expanding the commercial team to, if me and Stuart are out busy chatting about how to grow Hexa, there are other people that are promoting our services to the wider market, and we've got some really good commercial people now alongside the growing internal team as well.
Yeah. So when from the first 4 were full-time employees.
Yeah.
Yeah. When did the full-time employee hiring? I'm sure it's still happening, but when was the first time you hired somebody that wasn't a full-time hire?
Yeah, so we've got a couple of consultants in the business. So the majority of people in Hexa are full-time, but we have got a couple of consultants. A couple of those people are people we've known for a while, certain skill sets. We've been pretty lucky there's a couple of individuals in the business that, have worked for lenders for a number of years, and actually perhaps they want to support more than one client, for example, but we benefit from having them in our business for a certain amount of days a month. So we've probably got 2 or 3 consultants in Hexa that provide a different service, but we've also got things like management accountants that we pay for on an outsourced basis that add real value to things like board meetings and preparing the financial statements and things as well. So I think that probably more so than ever, you've got to think about like alternative ways of bringing talent into your business. Even things like working hours. These are challenges that we get asked about. I prefer to work 4 days a week, or I'd like to compress my hours. So, we're pretty open to that for the right people, and as long as the role itself permits that. But yeah, no, it starts with the person first, and then what they want to achieve out of their role, what we need from an expertise point of view, and then trying to make something work. Then
I guess it's output based as well. If they can do what's needed and more in 4 days, why wouldn't we look at 4-day week, for example?
Exactly. And it's a difficult one because in our world, our customers, some of them are 9 to 5, Monday to Friday. Some of them work weekends. We don't typically work weekends. I think as business owners, we have to occasionally, but I do try and keep that as family time in the evenings as well. But yeah, in terms of, working hours, there's a couple of people in the team that, are on different hours based on, where they are at in their life, or, whether they got childcare commitments or other things. And then, yeah, some consultants that do a set number of hours, a month for us, but provide a, value there as well.
Yeah. So what's the main difference between a full-time employee and a consultant, doing something similar?
On the face of it, not a lot. They're still part of the Hexa team, but it's perhaps it's location, or it's stage of their career they're at, where they're perhaps not interested in working full time, but they want to work with you on a fractional basis, or provide board advisory, for example. So yeah, it's the person. But in terms of the culture of Hexa, whether you're a consultant or a full time employee, I said most of the team are full time employees. It's still the same.
I agree. I'm aware that you've won several awards as a business. Let's hear them.
Our startup award winner in 2022, I think it was. Yeah, that was our first award, and something that me and Stu still speak fondly about. Real vibrant event in Cardiff, and we won that for service delivery in Wales, which was great. Commercially focused finance award winner as well. Economic contribution for Wales. So we've won 3 or 4 awards now. We've been finalists in a couple of others as well. Not successful, but great to be recognised as finalists as well. So yeah, no, that's really important, not just for us as business owners, but for the team as well. So we've now got Fion that's joined the business in head of marketing role. So she's really keen on profiling Hexa and sharing the success as well. So yeah, really good.
Yeah, good. It's nice to have those awards for the team to know that you're doing the right things, particularly the economic award.
Yeah, so
doing the right
customer
things.
service and economic contribution awards were like really important. The startup was great because it was the first award we won. But yeah, no, it's just a sign that you're doing something right, and it does give you and the team a bit of extra motivation. So hopefully there's more to come.
Yeah, definitely. I know that your world is like any industry these days competitive. For businesses out there and they're thinking, oh, I need to raise some finance. How do they find Hexa? Do they Google search? Do they network? Do they ask around in their immediate network? How would they find you?
Yeah, I think most of our business to date has come from referral and recommendation. So, a lot of the relationships we've had for a long time on the supplier side, and then the direct customers are typically, either businesses that we've met from networking in Wales, or perhaps somebody with a trusted client base has introduced them. So if you think about like accountants, solicitors, IFAs, some of the government organisations that perhaps provide funding that can't support maybe have given some referrals to us. So, for us, it's about then, trying to do a good job. Hopefully we can raise funding for them, but if we can't, obviously we're explaining why and perhaps doing the referral like I mentioned earlier. And then, reciprocal introductions to other introducer partners of ours has been really important. With socials as well. So we try and share some really good stories about the businesses we've helped. So in terms of things like client testimonials or businesses we've supported and why we've chosen that product for them at that time. So we're trying to do a lot of stuff like that in Wales as well to promote the services. We don't do a huge amount of outbound marketing, although we do try and pick up the phone to customers, which I think is really important now, rather than just emails. But it's usually people within our network, businesses locally that we think, because we've helped somebody similar to them, we could do a good job for them as well. So
that's really important. Getting the marketing out there, something we're focusing on massively, with like testimonials, more video content as well, and storytelling, as you said, because a lot of people see the content that we post but might not engage or like with it, but it still tells a story about what you've done elsewhere. And it builds trust, it builds credibility, and when that time is right, who are they going to think of?
And trying to be relevant, like sharing insights into the market, making sure you're speaking, like if you've done a transaction for a customer, make sure you're speaking to them regularly to find out other areas you can help them, asking them if they know any businesses that they think that would benefit from our services. So we're not transactional. We're more relationship led at Hexa. So we're trying to build longer term relationships with businesses, and we're fortunate enough that a number of them have come back, and we've provided additional funding for them as they grow, or they've referred us on to other clients. But yeah, really, I guess a combination of just being visible, being an alternative to traditional banking, being really relationship led, and then sharing good insights.
And what about innovation in your industry? I know it's heavily regulated. Is there, because you mentioned so many different options or products that are available, is there new products coming regularly?
So you've got like the I guess the core finance products that are available for a different purpose. Some of the lenders will innovate on things like decision-making time, so they'll provide instant credit decisions on certain size transactions, for example, which helps us in terms of the service. There are some digital lenders out there that have got, I guess, unique products that some of the revolving credit facilities that we offer, for example, that are portal led, they're facility led, and then the business can, I guess, use technology to access the funding and things like that. So there are some new entrants, but there's still a lot of the core traditional funding products where I guess our role is to try and explain why a business should use them, in a certain circumstance, as opposed to using another product, for example.
Yeah, and what about the big word at the minute, AI? Has that been seen in your business and in your industry?
Yeah, I think certainly seen it in some of the outbound activity, like some of the outbound marketing activity. We're always reviewing like the systems. Like we use CRM system, but then can we get better use out of Microsoft Teams and the Microsoft suite of products? And is there any automation that we can bring in that would reduce the time it took somebody to apply for a finance product before obtaining the funding, for example? So yeah, we're looking at it. And things like some of the note taking functionality that's now available certainly helps us with follow-ups internally as well as externally. So yeah, we're trying. I'm definitely not the best, and I'm with young kids. I think technology is something that you try and I guess keep an eye on, but I'm definitely not the best with technology in our business for sure. So it probably takes me a lot more to understand it than others.
Yeah, and it's hard to keep up. There's so many new tools coming up. There's so many new AI products that can do this, can do that. I mean, we've just implemented a new CRM, and there was one reason that we implemented it, and it's because it's the only CRM out there that automates as much as it does.
Yeah.
So once a contact is on the system for us, email a number, we never have to do any admin again. Texts, WhatsApps, calls, emails are all recorded and a note taken automatically.
Perfect.
Essentially, we've taken 40-50% of our day, because after you do a call, you log it onto the CRM, you then follow up. Yeah, everything is taken. It's twice the price of what we were using before.
Yeah.
It's not a price motivated decision. It was purely, this is going to save us so much time.
And then how does that fit in with your business? So like someone in marketing may use AI for a different reason to someone in commercial, for example, or operations. So yeah, no, I think it's fascinating. I've been on a few talks about AI and been to visit a couple of businesses that are using it, some manufacturing businesses that are using AI well, and it's fascinating to see how it's gonna affect the way we work.
It's exciting but scary at the same time.
Exciting but scary.
Yeah. What about the next 6 months, the Hexa? We've got 6 months left of the year. What's the big things that people can be aware of, or anything that's on your front of mind?
Yeah, so we've recently had a structural change internally. So we've formalised a new board, which has been really exciting. So we've got commercial director, ops director, a couple of board advisors, and myself. So we've kicked off a few board meetings under that structure in the last couple of months. We've been really exciting. Not a huge amount of growth plans on headcount in the next couple of months. It's really about just continuing to identify more businesses that we can fund. So we had a couple of new starters that are now embedded. The commercial team's fairly broad now. So yeah, it's doing more of the same. We've got ambitions to do our own lending. So there's a project ongoing at Hexa at the moment where we're looking at the benefits of us becoming a lender, potentially for the local area for businesses that are looking for funding. So as you can imagine, that probably takes up a fair bit of time in terms of system development, regulation compliance, and then funding ourselves. So something really exciting to get our teeth into, but we just want to carry on doing what we're doing at the moment. So
continue good customer service, can keep winning new business and keep the headcount the same.
Exactly.
Yeah, nice. Okay, well, thank you very much for coming on the podcast, Ben.
Absolute pleasure.
If there's anyone that's out there thinking, oh, I need finance, where can they go find Hexa? What's the website? What's the contact details?
www.hexafinance.co.uk. All of our contact information's on there, as well as on LinkedIn and Instagram.
Thank you very much for coming on. I appreciate your time.
Pleasure. Thanks, Kieran.
And that is the end of the episode with Ben. What an interesting story about how his appetite to risk has completely changed from the beginning of his career to where he is now. Please don't forget to like, comment, and subscribe. And we look forward to seeing you on our next episode with Oliver Smith.